Hello, welcome back to the channel. In today's episode, I just wanted to run through a recent stocks and shares and cash ISA that I've opened, as it differs slightly from some of my previous videos where I mentioned my kind of savings portfolio. And I just wanted to run through why I've chosen to update to this account, and hopefully something that maybe you guys can utilize as well. So let's go. So before we start, I just wanted to say thank you to everyone that subscribes. We are over 100 subscribers now, which is amazing. I never thought that when I first picked up the camera that people would actually listen to me. I just kind of wanted to try and see if, the things I'd learned could help other people. And I'm glad to see that it is resonating with some of you. So thank you so much. And thank you for the engagement. Thank you for some of the comments. It has prompted me talking about ISAs now, so thank you for your recent comments and things like that. So just keep up the conversation. Anything you want me to cover, any questions you have, I'm more than happy to answer, and I will try and answer them using videos where and when possible. So thank you. Recently, I have opened up a Trading 212 cash ISA and a stocks and shares ISA, and I'll explain why I decided to go with Trading 212 and why I've got one of each. So to start, I'll just grab my phone and just clicking into the app, and I'll kind of show you as I'm looking at it now. I really like the Trading 212 app to begin with. So you can see here that there's my cash ISA. So this is about £1,800 in there at the moment. And you can see one of the main reasons I do like this is, as you can probably see there maybe, it's at 5.17% interest, which is really, really good. I don't think there are any high street banks out there at the moment that are offering this on a cash ISA. You might get some instant access savings rates, but on an ISA, which is protected from paying tax on your interest, there isn't really anything that I've seen on the market that is at this level. I also really, really like this account because it pays you interest daily, and it shows you the daily amount of interest that you are being paid. So in my case, I'm earning basically just under 25 pence per day. Now, that is quite important really, because some ISAs that you can get that are like fixed term and things like that, you have to stick with that product for the set period before they then pay you a lump of interest. Whereas this is really kind of almost class leading in that I can have money sat there, it's accruing interest for me. So at the moment, over the last probably couple of weeks I've had it in there, I've made £2.48. So that goes to show how long I've had it there. But it's nice to just see my money growing and see it earning me back, although it is 25 pence a day. It's better than nothing, right? So I think that's a really, really good feature. You've also got here, it links up to your different allowances. So you can see there, it shows me how much of my yearly ISA allowance. Now this is my first ISA that I've opened this year, which is why I've still got 17,000 to save, which I'm probably not going to get to that much anyway. But for those of you that are looking at something that's quite easy to use, really kind of shows you what you've got left and what limits and things and where your interest is being earned. This cash ISA for me it's the personal one that I use. So this isn't financial advice, of course, but it's what I am doing. So that was the first one. The second reason I like Trading 212 is because if you see up here, you've got a drop down menu. So I click there and it shows me all of the different products and things that I can have with Trading 212. So I have a stocks ISA. So this effectively is exactly the same as what I just had. However, this pot of money is invested into the stock market. So as you can see at the moment, it's not actually performing as well as my stocks and shares ISA. It's at 3.7% overall. That's because I've just bought a load of shares through it. So how do I explain this the best way? The return isn't as high yet. It was tracking about 12% probably last week. And then obviously I've bought some more shares at a higher price, so the net overall isn't as high. My portfolio is effectively made up here. I basically just buy S&P Mix, which is a mix of the S&P 500 along with some treasury bonds and gilts and things like that all around the American stock market. And then I just have a simple Vanguard S&P, which is probably about half of my portfolio. And that's just basically the top 500 companies in the S&P. So basically the American stock market. And it's just invested in different shares, and I kind of, let that do its thing. My split is probably around 3/4 cash ISA at the 5%, and then 1/4 in the stocks and shares ISA. The reason for me that I do that right now is because I am currently investing in a house overseas, which we are trying to build outright with no finance. So having cash sat there that is earning 5% guaranteed for me at this point in time is very important, because I can't really afford to have a big dip potentially and lose a load of money, which is possible in an S&P stocks and shares ISA. All of your money is invested. So that for me right now is why I'm more heavily weighted towards the cash ISA. And that's why I really, really like this Trading 212 one, because as you can see, it's at 5%, which really is phenomenal for a cash ISA. That's like, as safer investment as you can possibly get. The other reason I really like the Trading 212 account is because you can just withdraw money in and out. Any money that you take out of the ISA, I believe, I'll have to fact check this, but I believe that if you take money out, it doesn't, you can put that money back in without taking away from your limit. So let's say I've got 10,000 in there, I took out 10,000, I could still put 10,000 plus the additional 10, so my full 20 throughout the year, rather than somewhere if you've already paid that in and take it out, you kind of lose that amount that you've paid in. Don't quote me on that, I believe that to be true. But again, even just having that bar along there to show you how much you're allowed to invest throughout the year is just super handy, so you don't fall foul of any penalties or things like that, which I don't think can happen. I think it just doesn't let you invest. Is there anything else I need to say about this? Nothing really. I think it's amazing. It is such a good product for the market right now. I mean, high street banks at the moment are paying 1, 2, maybe 3%. So if you're gaining 5%, then, and I'm trying to word this very carefully because I know there are some people that earn maybe 2, 3%, and I'm not trying to, if you're earning any money, any interest on your money saved, it's good. But the point to always remember about the market, and especially savings, is that you're not necessarily trying to just beat inflation, because in reality you probably won't, but you just need to beat everybody else. And that sounds really harsh, I know, but if everyone sat in an account that's paying 3% and your money sat in an account paying at 5%, your money is growing 2% more than theirs is. And that's the point, because ultimately when it comes to inflation and growing your investments, you just need to outgrow everyone else. And that sounds so harsh, but it's always the analogy of, you're in the woods and there's a bear charging at you, and you're just doing your shoelaces up, and the person you're with turns to you and says, "Why are you doing your shoelaces up? You're never going to outrun a bear." And you just go, "I don't need to outrun a bear. I just need to outrun you." It sounds harsh, but it's the economy we live in, and that's basically it. If you're earning more interest than the next person, they're losing money compared to you, and you're kind of not. So save yourselves, basically, is what I'm saying. And at the moment, this ISA account is what is doing it for me, from what I can see. Is there anything else on this ISA that I need to mention? No, I think it's quite a quick one. Like I said, I will move more of my money into these sorts of accounts once the house is finished overseas. But for us, having a physical asset that we can utilize that is completely paid off is the goal right now. And then after that, I'll look at savings and investments growth more outside of my pension, using accounts like this. So yeah, that's it really. Trading 212 account, If you like what I've said here, do some more research on it, but absolutely get one if you like what you see. They also have on the stocks and shares ISA, if you recommend a friend through the app, you can get like 100 free shares. So again, it's always worth, if you've got a load of people that sign up, trying to take advantage of some of these benefits and getting those free shares where you can. If you're quite risk averse, the cash ISA is definitely one to get because it's FSCS secured and regulated. So that means it's exactly the same as all the big banks, where if you lose money up to £85,000, it's secured by the government. So it's exactly the same thing. People just do get a bit hesitant when you don't have a high street name behind it. But from what I can see, Trading 212 seem pretty good. And like I said, if it's got the government guarantee, you're kind of okay. So yeah, that's it really. Hopefully what I've said there helps some of you out there looking for an ISA and wondering what ones to do. Also, for those that are interested in my kind of savings composition, as I've just mentioned, the house is priority. So hopefully this kind of helps you understand why I've got less money in an ISA and things like that, and more in just instant access. Kind of anything over 10 grand at the moment, I'm literally taking out cash or sending over in transfers to our builder over in Europe, who is then putting that and converting it into building the house. So that should be exciting, and a project that I'm eagerly waiting to share with you guys when it's further along. I don't want there to be big gaps in the videos, so I feel like once the house is up, it'll be good to just share the whole story of that and show you where my investments have gone. But for now, that's all I've got to say. Thank you all again so much for watching and supporting this channel. It really, really does mean a lot. I appreciate all the comments and appreciate all of you subscribing. But really, yeah, that's everything for now. So thank you all so much for watching, and I'll see you in the next one. Bye-bye.